College is less than a month away. For many students, the burden of student loans can weigh pretty heavy on not only them, but their families as well. What can borrowers do to manage their loans? Nancy Cotu from Money Managers Financial Group joining us right now in the Fox 32 Plaza with all the tips and the information that you need. Nancy, always good to see you.
Good morning, darling.
So let's talk about this. Just a couple of weeks ago, something popped up on the internet that's got a lot of millennials, a lot of their families buzzing. Something about a forgiveness debt. What is that? Is that even real?
So yes, it's real, but what they're thinking of is there was a proposal to President Trump that he would forgive all of the student loan debt. There was a survey done by moneytips.com,
yes,
and they found that 4 out of 10 people that answered the survey actually want that to happen. But the reality of that is remote.
Yes.
$1.3 trillion of student loan debt. If we were to forgive 25% of it, it would be $330 billion that the government just doesn't have,
right,
not to mention banks. And interesting, the respondents to that survey were pretty much 18 to 29 years of age, so they would be our recent graduates, and of
right,
course they're feeling the pain of student loans.
Okay, so even if that forgiveness is out there, let's just say if, you still got to pay the piper.
For sure. So there is a forgiveness plan. It's been in place for double-digit years, actually.
Mm-hmm.
The forgiveness plan that's in effect is for certain student loan borrowers that take certain jobs. So if you take a public service job, you're in it for 10 years, you pay your student loan impeccably for 10 years, you can have that loan forgiven.
Okay.
Or if you're a teacher, it gets even better. You could have 5 years and have as much as $17,500 forgiven.
Okay.
Or the people that choose to take the extended payout program, after 20 years, they can have the balance forgiven, but it comes with strings.
Yes, I was going to say, it's something else to that.
It's very something else to that.
Read the fine print on that as well. But as we, a lot of kids, as we said, getting ready to go off into college, interest rates are going up as well. How high is it expected to go up?
So right now they're at 3 3/4%. They're going to go to 4.45. That's the bad news. They're going up. The good news is they're the lowest they've been in a decade.
Mm-hmm. Okay. So if you are going to college and you are taking out a debt, you've got some tips. You say, don't worry about this. If you follow these tips, you'll be okay when you get out of college. So give us those first tips. The first one, you say, start studying.
Start studying now. And there's a wonderful resource that most people don't know about. It's called the Consumer Financial Protection Bureau. They go online to that website. They have endless worksheets that you can work through what school you want to go to, what the tuition's going to be, what that would mean to you in terms of how much debt, what are grants and scholarships available, and then a worksheet to figure out, can you afford it when you graduate? Can you afford the payments based on the job you're going to take?
Right.
So do your homework ahead of time really, really helps.
Okay, and real quickly, we're going to get through the next ones. You say make paying that student loan back, make that your number one priority.
Number one, because it could eat you alive in the long term. Make that first payment. A lot of students forget because there's a 6-month gap between graduation and that first payment. Don't start out with penalties. Be aggressive. Don't be tempted to take the 30-year plan. Look to try and fit into that 10-year plan. There's a studentloanhero.com, which will give you wonderful resources on how to get your interest rates down.
Yeah.
Be proactive.
So you're attacking that debt, and then you say think long term as well.
You got to save for retirement, and I know it's hard to tell a 21-year-old for 45 years from now.
Yeah.
But the sooner the better. 10 to 15% of your income. If you can't afford that, at least get your employer match in your 401k.
Nancy, where can people go if they need more information, especially about that consumer protection?
monimgr.com.
All right.
monimgr.com.
All right, good deal, Nancy.
Thanks,
always
darling.
good to see you.